Here, kindly note, ALM is a major part in banking nowadays. In treasury also, and in your this corporate banking also, and retail banking also. ALM means what? Asset liability management. In retail banking, your assets are your retail loans, housing loan, personal loan, credit card loans, and liabilities are your deposits. Okay? Mainly. Now, there can be others also, but mainly this is the main business. In corporate banking, same thing. Your corporate loans, it can be pre-shipment, post-shipment, then short-term loans, okay, given to the companies, unsecured loans, okay, funded, non-funded, all can be the assets. And liabilities, again, the deposits. Treasury, the asset liability refers to your assets are the bonds which you purchase, and liabilities are the bonds which you issue. So that's why ALM is important in each and every sector of the banking. Okay? So let's start. Which is the most important risk management function in the treasury? So which is the most important risk management function? Firstly, risk management. So which is the most important risk managing part? Now there are various things. Let's see. Balance sheet management, market risk management, policy management, and ALM means asset liability management. So which one is most important among these? Is it balance sheet management or market risk or policy or asset liability? Now many of you will think, obviously topic we have the topic of ALM. So answer will be ALM, isn't it? Think over it, but it's not that simple. One thing I'll give you in writing that this is not the answer. Asset liability management is not the most important function. You'll say, sir, if this mismatches, just now you told me that 5% only is allowed, otherwise RBI will fine you. Agreed. It's not that it's not important. It's not the most important among these four. Which among these four is the most important one? Without which your bank will be in a trouble if you don't manage it properly. Which one among these? Yeah. Is it balance sheet management? Okay, let's see one by one. Balance sheet management. Balance sheet management means what? Managing the balance sheet means what? Matching your assets and liabilities. Roughly this and this will be related to each other. So if this is not the answer, this will also not be the answer. So market risk management and policy management. So now think. The most important over here, the answer is market risk management. The most important one, market risk. Why? Because in any bank, there are basically three risks. Main are the three risks: operations, credit, and this market, right? Ops, credit, and market. These are the three risks in any bank. Main. Others as well. Others are there. Reputational risk is there. Business risk is there. Or we call it strategic risk. Liquidity risk is there. All these. But the most important one over here is always market. Remaining everything you can control. Everything. But market risk, not possible. Because market risk is not in your hands. You can only manage it. Try to manage it as much as possible. Okay? Means what? I'll give you an example. Market risk. Tomorrow there is a third world war. So if there is a third world war, immediately the oil prices will go up. Immediately all the banks will be affected. So is it in your hands as a bank? No. Tomorrow if RBI increases the repo rate by, let's say, one hand 2%, it's not possible 2%, but then also you don't know what the situation might come. Is it in your hands? No. Right? So that's why that is known as market risk. Okay, so market risk management is the most important function in any bank. Got it? Move on. Asset liability management refers to the management of net interest margin, NIM. See this, net interest margin, NIM. NIM means what? NII divided by your yielding assets. So NIM, to ensure that its level and riskiness are compatible with the risk return objectives of the bank. It means what? Your NIM is as per the requirement. What is the requirement? Risk reward. Sure, if your NIM is too high, that is obviously good. NIM is high means what? Sure. What is NIM? NIM, just now I give you, NIM equals to NII divided by assets, or you call it yielding assets. So NII upon assets, that is known as NIM. Okay. So if somebody's NIM is high, then it will be very good. It will be happy. The person will be the happiest person. Why? Because what is NII now? What is NII? NII means net interest income. Means what? Average interest on the loans minus average interest on the deposit. That is your NII. Okay? NII, I'll just write in short now. Loan interest minus deposit interest. Everything is average. Deposit interest. That is your NII. So anyone will feel if this NIM, okay, is high, everyone will be happy. But it means you are getting higher interest. It means you might be giving some riskier loans. That is also possible. So this is the meaning of risk return objectives. So your risk and return should always match. I don't want huge returns. For that, I'll have to give riskier loans. That is also not required, isn't it? So, what does NIM refer to? What does NIM refer to? Okay. So now let's look at it. I'll remove all this now. You have got this. Remove it. So what does NIM refer to? It refers to the difference between the interest paid and the interest received after adjusting the total amount of interest generating assets held by the bank. Okay. So it refers to the total interest paid and total interest received, means loan interest minus deposit interest. Okay. After adjusting the total amount of interest generating assets, means interest generating assets. Understand this word. Just now I gave you assets. Assets means what? Loans. But it includes those loans only which are standard loans. If some loan becomes NPA, then that is not included. Okay. Next. So, number one. Number two. It refers to the interest paid on deposits by the bank. Everyone read this. It refers to the calculation of the difference between the discount given and the discount received. So NIM means discount given minus discount received. Is it so? It refers to the calculation of difference between the commission given and commission received. Simple one, isn't it? First one, A. Right? Just now I give you NII upon assets. Okay, NII means what? Loan interest minus deposit interest. The interest which I receive minus the interest which I give. That's the difference. Upon assets. Okay. So answer is A. Dash represents sources of funds and dash represents uses of funds in bank balance sheet. Which are the sources and which are the uses? Many of us will get confused over here. kindly note there are two types of balance sheets nowadays. Okay, one is known as horizontal balance sheet, horizontal, and second is known as vertical balance sheet, vertical. Okay, one is horizontal, second is vertical. These are the two balance sheets. Generally, all the banks nowadays use this vertical form of balance sheet. Do you know what it is? Horizontal balance sheet means you have two parts. One is liabilities over here, liabilities, and second is assets, right? You have this. Then you have again two parts, current assets, fixed assets, right? Current liability, fixed liability. These are the four types of sections over here in horizontal balance sheet. Again, here you have two parts. Current assets are of two parts. One is liquid asset and second is normal current assets, other than liquid assets. And this fixed liability, that has also two parts. One is liability from outside agencies like bank or some bonds issued. And second is liabilities from inside, owner's liabilities, capital. So this is horizontal. But what is the question? The question is not on this. The question is on this. In vertical form of balance sheet, we have two parts. One is sources of funds and second is application of funds. Now see this. One thing I'll make it clear. Sources of funds means from where I get the funds. Where I get. So generally I'll tell you this part will be the sources of funds. This part. Here current liabilities and fixed liabilities. Here sources means what? Deposit. Depositor is a current liability. Or means what type of deposit it is. So what I mean by this? It is somebody is giving me money. So that is source of funds. So sources of funds means over here. So what are these deposits? Deposits. Okay. And second, or deposits, or you can call it liabilities. Liabilities. And second, application of funds means where do I use that funds? I'll use those funds in loans, assets, or loans. Okay, anything. So this is the answer here. Dash represents the sources of funds. What represents sources of funds? Deposits or liabilities. So liabilities will represent the sources of funds here. First blank is for liabilities. Second blank is for dash represents uses of funds, assets. Right? So liabilities represent sources of funds and asset represents uses of funds. Okay? So let's mark it clearly now. So the answer over here is liabilities B and assets. Okay? Clear? Next. You read this now. Which of the following is the role of treasury in asset liability management? So which is the role of treasury in ALM? It helps in identifying the market risk. It helps in hedging residual risk. It helps it monitors exchange and interest rate movements to identify the interest rate risk. So what does treasury do? What is the role of treasury in this? Treasury is always, look at this, treasury will always focus on main job, market risk. We saw that question first. Market risk, that is the only main jobs here. There are two jobs of treasury. One is market risk. Second is your forex. These are the two main jobs of your treasury. Now somebody will argue that see, credit risk is also checked by treasury. Agreed. Credit risk is also checked. Operations risk is also checked. Everything is checked. But the question is important, most important. Right? I go to my office, I sleep, I work, I go to movies. But which one is the most important, without which you cannot live? Food, right? So that is the meaning. Which is the most, everything is required, but most important one. So the answer over here will be what? Is the role of treasury in ALM. So what is the role of treasury? It helps in identifying market risk. Yes. It helps in this hedging residual risk. Now, what is this residual risk? What do you mean by this residual risk? And what do you mean by this word hedging? Hedging and residual. What do you mean by these two words? Let's go one by one. First, let me explain you hedging. Hedging means reducing. Remember, three words are very important. Hedging, leverage, and arbitrage. These three words will cover your entire BFM. Hedging, leverage, and arbitrage. Entire BFM depends on these three words only. Hedging means reducing, leveraging means expanding, moving ahead, taking more risk, and arbitrage means buying in one market, selling in another, in short span of time. Okay? So, hedging means reducing the risk. What do you mean by this? See here, simple example. Why do you buy the car insurance? Why do you buy the bike insurance? Why do you buy the life insurance? Tomorrow if something happens to the car, bike, or even yourself, the risk of no money or a loss will be reduced. That is the meaning of hedging. Insurance is major hedging point or hedging tool. Okay? Others are also there, like derivatives, okay, CDS, credit default swaps, total return swaps, all these are there. We'll come to it later. Okay? For that, join the paid batches, very important ones. Okay, here also I'll cover it when the topic comes. So hedging and residual risk. What is residual now? Residual means what remains after everything. I apply all the tools, I apply all the hedging material, I apply everything, but then also some risk remains. So that is known as residual. So it helps in hedging the residual risk. Whatever is hedging or whatever is remaining, treasury tries to adjust that also. Obviously, that is the job. Every risk of yours should be adjusted. Kindly note. Very simple rule. So, correct. Now, do you have the answer 1 and 2 anywhere? No, only this. So, answer will be this only, simply. In exam, whenever you see such things, 1 and 2 as the answer, correct one. But you don't see 1 and 2, you see only here. So, obviously, third will be correct. Let's check, is third correct? It monitors the exchange. Exchange means forex. Here it means forex. So, its job is forex, isn't it? Forex management and interest rate movement to identify the interest rate risk. Interest rate movement. Interest rate movement means what? What type of interest rate? This relates to your repo rate, your CRR, or any benchmark rate. See this, any benchmark. Now, what do you mean? You'll ask me, sir, what do you mean by this? Any benchmark? Any benchmark means it can be related to forex. Here, if you are dealing in forex, then the benchmark is not CRR or repo. Nowadays, it is ARR, alternative reference rate. Right? If you are dealing with this local currencies, repo, most important one, CRR for the banks, right? So benchmark rates, any benchmark rate, that is basically this meaning of this interest rate. Okay, so interest rate movements to identify the interest rate risk. Identify. Okay, so the answer is 1, 2, and 3. Good, all of them. Clear, everyone? Concept cleared? Yeah. Move on. Next one. Don't just focus on question and answers. Try to understand. Because in exam, it might happen that this question may not come or may come, anything. but the explanation what is given will be useful to you. Focus on the explanation. Okay. Next one. The steps involved in ALM process are. So what are the steps in ALM process? Steps. Okay. Let's read one by one. Reviewing the interest rate, examining loan and investment, credit risk and contingency risk, and reviewing actual performance. Next, understanding the process of deposit, making proper payment, and identifying queries. Queries not, it's queries. It's not queries. Okay, queries. Queries is your mining. Okay. So, identifying queries and processing services, delegation of loans, reviewing loans, making proper adjustments, etc. Okay, adjustment, making proper adjustments, etc. Okay, and all of the above. So, which are the steps involved in the ALM? Asset liability. Is it reviewing the interest rate, examining the loan and investment? So, yeah, reviewing the interest rate is a part of your ALM. Obviously, it is the part of your ALM. Because ALM means what? Asset and liability, loans and deposits. Okay. In treasury, it is bonds purchased, assets, versus bonds issued, liabilities. So it can be anything. Simple rule is, wherever I am applying the funds, wherever what are the sources of funds. Simple logic. Okay. So A is the answer, obviously. What about B? Understanding the process of deposit, making proper payment, identifying queries, and processing services. So process of deposit, making proper payment. Third, delegation of loans, reviewing loans. Okay, making proper adjustments. This is related to loans. Delegation of loans. Delegation of loans means various powers to various employees. At what level, what power should you give? To the BM, what will be the power? To the regional manager, what will be the power? So, is this a part of treasury? Treasury? This is not a part of treasury. That's why I said all of these is not always correct. This is not the part of treasury. This is the part of your management, board of directors, policy. Right? This is not the part of your treasury loans. Okay? Similarly over here, process of deposit, making proper payment, identifying queries. This is a procedural issue, operations part. This is not the part of ALM. ALM is a part of always market risk. Kindly note, market risk. So the correct answer is A. Okay, this is your correct answer. Reviewing the interest rate, examining the loan and investment, credit risk, contingency risk, reviewing actual performance. This is the main role of ALM. You have to check the performance. Performance means what is the performance of your bonds portfolio? What is the performance of your loan portfolio? What is the performance of your deposit portfolio? That's what is done in treasury. Okay. Next. You got it, answer A, not all of the above. Okay. Which of the following statements is correct? Correct. Regarding organizational controls of the bank. Organizational controls. Okay. So basically we are dealing with treasury. Bank treasury, you can write it. Okay. So bank treasury. So what is the which of the following statements is correct? The front office deals with counterparty banks. Front office will deal with counterparty banks. Counterparty means opposite party, buyer and seller. If you are the seller, the other party will be the buyer. So front office deals with that. Back office is mainly responsible for confirmation, accounting and settlement of deals. Mid office maintains the overall risk profile of the treasury and also monitors the liquidity and interest rate risks, which are close in line with the ALM guidelines. Which of them? Which of them is correct? What does front office do? Front office is like the soldiers on the border. They are directly fighting. Front office is the same. They are fighting. They are dealing with the various banks, various customers, banks as well as non-banks, buying and selling, making the deals. So A is correct. Back office settlement. Take the transactions, see to it that every transaction is settled. Mainly responsible for confirmation, accounting and settlement of deals. Correct, that is also. Settlement of deals is an important part in treasury. Kindly note. Don't underestimate the power of back office. Many of us feel that front office is very important, dealing. Nothing like this. Each office is important, front, mid and back. Each one has its separate role. Okay. So back office is also responsible for confirmation, accounting and this settlement of deals. Mid office manages the risk profile, overall risk profile. So this is the main department, mid. This is the main department in banking, in treasury. Of course, all are important, but main one. Where this provides the input to the front and it provides the input to the back also, back office. Okay. So, mid office maintains overall risk profile and blah blah blah, remaining everything you can read. Answer is all of the above. That is the right answer. Okay. Next. One second. Yeah. Take this numerical. Consider the 6-month long forward contract of a non-income paying security. Here, 6-month long forward. This numerical I told you, we'll be solving a numerical. This is the one. This is a sure shot exam numerical in the exam and very simple one. Very simple. Okay. So consider a 6-month forward contract of non-income paying security. Non-income paying. Okay. The risk-free interest rate is 6% per annum. It's a sure shot question in your exam. Kindly note, sure shot. It's there in your book also. 6% per annum. The stock price is 30 and the delivery price is 28. So stock price is 30 and delivery price is 28. Calculate the value of the forward contract. Now there is a formula. Don't think too much. It's very simple, one line answer, but there is a formula attached to it. If you don't know the formula, you'll just beat the bush. This, that, don't do anything. Simple formula I'll give you. Okay? Forward price equals to F equals to 30 into E raised to, okay, 0.06 into 0.05. So what do you mean by this? See this, value of the forward contract F equals to F minus K. So F minus K means what? Forward price, this F minus K. K means the fixed delivery price. K is a delivery price. F is the forward price which you have calculated. What you have calculated? This one. How did you get this answer? 30.90. See, E raised to 0.06 into 0.05. Now this calculation you will have to do it. If you do the calculation, it is 30 plus E raised to 0.06 and into 0.05. Into 0.5 also, it's simply 0.5. So 30.90. So value of the forward contract is F minus K into E raised to minus RT. Okay. So F minus K, see this, E raised to minus RT. F is what? 30.90. This is what which you had got. Minus 28 into same equation again. E raised to minus RT means 0.06 into 0.5. It is 0.5 over here. So this is 0.06 into 0.5. Okay. So this same thing is repeated over here. Look at it. So if you solve this, multiply this and solve it, you'll get it 28, approximately 2.8, approximate. So this is the value of the forward price. Means value means what? This is a premium to be paid. Okay, this question comes in exam. Remember this premium concept. See this premium, if the contract value moves towards your value, your strike price, if the market value moves towards your strike price, then this premium goes on increasing. Premium goes on increasing. You win in that. But if the market price goes against your strike price in the reverse direction, then this premium goes on decreasing. That is how the futures and options, you see options market, premium which you pay. You see many people have lost money in options market. Do you know? You might have read it. Many people lost money. Why? Because of this premium. This premium, if it goes against you, you lose money. If it goes in favor of you, you earn money. The whole of your options and futures market is dependent on this, and this numerical, this calculation is actually used in options market. Okay, so those who want to do options trading, you can use this as an educative purpose. Okay, education purpose only. Okay, so now before going, I would suggest everyone to join the batches. The batches of Adda 24/7 have just started. Okay, join the crash courses and the new revision batches. Now revision batches will start in some days. So join them, as well as join the crash courses presently going on. These are detailed crash courses. Okay, how to join? Go to Adda 24/7. Always purchase through the app. In the app, you are getting 1% extra. See this CAIIB June crash course. Ebooks, mock tests, online live classes, recorded sessions. Not only online live, but recorded also. So all these you get. And these ebooks and mock tests are to the level of chapter wise. Per chapter you are getting. So go for it. Also you have the Mahapack. You can join the Mahapack also. In Mahapack, you are getting multiple batches per subject, 15 plus batches per subject. So you will be getting revision that many times. Okay? You will be getting that many times revision. I will show you how to join the Mahapack. See this over here. CAIIB Mahapack 2.0. Join this. Right now you are getting double validity offer. Means you buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. Okay, ebooks, mock tests, again the same, and 15 plus batches per subject, 15 plus, that many times revision you have. How to join it? Say this, go to buy now, put the code Y432, never forget the code Y432, click on enter. Look at this, 79% discount plus 1% through the app. That's why I'm saying download the app first, okay, and then purchase it. So 80% net plus double validity. So it's a win-win situation for you. Join the Mahapack or join the crash course, anyone. Okay, I would suggest join the Mahapack. Okay, bye.